Hey everybody, Derick Van Ness here, wealth strategist, investor, and life adventurer. And today I want to talk about the craziness that's going on in the market and how to make a little bit of sense with what's going on with the economy, what's going on with the market, what's going on with everything around you, and what you should do about it. So if this is the kind of thing that's been going through your mind like half of the country, then you're going to love this. By the end of this video, you're going to have a lot better idea of like, what are the forces at play? What can I do about it? What can I control? What can't I control? And just how to think a little bit differently. So my hope is that you'll come away from this way smarter. And if you get some value from this, please smash that like button. It really makes a big difference in us getting that out, getting the word out to people and helping more people understand the craziness that's going on. We're really doing our best to battle fear, empower people, and make sure that you guys live a better life, right? Also, if you're not a subscriber, subscribe. That really helps too. So I've got some notes here that I want to go through with you, but the most obvious thing is this, like what's happening out in the market right now doesn't make a lot of sense, right? The economy's in the tank. We're going to go over some numbers. The stock market's shooting through the roof. How is that even possible, right? The first thing to know is that the stock market is not based on the economy. It should be, but in today's world, a lot of that is related to speculation. It's not necessarily actual value in a company, and it's just what might happen in the future. So a lot of people are playing what's called the greater fool theory, which means if I buy it, it's going to go up. Someone will pay more for it than me. They'll be a greater fool than me, even if there's no value in it. And so I'm willing to do that. We've seen that happen in the real estate bubbles. We've seen that happen in market bubbles in the past. And that's really what's going on for a lot of people right now. And I'll tell you what's fueling all this for sure. I just want to make sure you get, this is all for entertainment. These are my thoughts. I am not an investment advisor. I'm not telling you to buy or sell anything. I'm just teaching you to think for yourself and sharing some things that I see happening out there in the world with the economy. So just don't take this as investment advice, right? So here's what's going on. The first thing to know, and this is like the gorilla in the room, I know we all kind of know this, but I think more people know it better than others, is that back in April, you may have heard of this little thing called the PPP loan and the CARES Act and the stimulus check and the unemployment and all the other stuff that went into effect because of the pandemic, right? So what most people don't realize is how much money went into the economy. So in April, more money went into savings accounts just in that 1 month than has ever in the history of everything that we know with record keeping gone into savings accounts in a whole year. So in 1 month, more money went into people's savings than usually does in a whole year or ever has in the past. So everybody was cash happy, especially business owners, right? A lot of business owners that I work with, they got $100,000, $200,000, $300,000 to bankroll their employees, bankroll their business. So while the economy was in the tank, right, and we're going to go over those numbers in just a sec, they're sitting on a bunch of cash. And sure, they're paying employees, they're paying for things, some were operating at a loss. A lot of businesses are still doing just as well, right? So what happened is we got this huge amount of cash into the market right as the market had just finished crashing in March. So guess what happened? And funny enough, even for people who aren't business owners, guess what the number one use of a stimulus check was? You guessed it, it went into the stock market. Like the average investor can see, hey, the stocks were up here, they just went like this. I should probably buy some of those because I know over time they're gonna come back, right? So the average investor took that $1,200 if they didn't need it today to eat, which is really what it was for. They put it into the stock market, and that kind of helped to slow down that drop, right? And a bunch of business owners are sitting fat and happy, and that market started to come back up. Simultaneously, a bunch of people stopped working or started working from home, and a lot of them thought, what better thing to do than become a day trader? In fact, the app Robinhood in the last couple of months has put over 3 million new subscribers into their service. Robinhood is like a super simple day trading app, and it's so simple that unfortunately a lot of people who probably don't know anything about the market have gone in there and become traders, and they don't understand what they're doing, and so that can be crazy. In fact, some people have even seen something that said they lost a bunch of money, and young people have even committed suicide over this. So it's a serious thing where you have young people or uneducated people putting their money at stake when they don't understand what's going on, right? So when you put all these things together, you have kind of this perfect storm of the market just dropped, everybody just got a huge chunk of change, whether that's personal or businesses especially, and they have a lot more time on their hands and they're figuring out, how am I going to make money? How am I going to get ahead while this whole thing's going on? So all those people, a lot of them went to the stock market, started dumping cash into there, and it turned the market around and created a rally. Now, once the market starts coming back, a bunch of people who were like, I didn't want to invest right as it crashed, are jumping on that and they're riding that train, okay? So that's helped to spur the rally. Another really, really big thing is how the S&P 500, which is one of the major indexes that a lot of people track, is set up. And the way that it's set up is the 500 biggest companies out there. And some of those companies, of course, have taken a hit, but the S&P is weighted. In other words, the bigger a company is, the more its stock impacts the overall portfolio. So companies like Amazon, which is a juggernaut, has a massive, massive impact on the S&P 500. So as it turns out, 6 companies, Amazon, Amazon, I think Netflix, Facebook, Apple, Microsoft, I'm forgetting one, but those 6 companies account for about 25 to 30% of the S&P. And guess what all those companies are doing? They're technology companies. They're skyrocketing. They're doing super, super good. There's all these smaller companies that are losing money or not doing very well, but they're being propped up by these 6 major companies. Oh, Google's the other one, Alphabet. These 6 major companies that are pushing everything else up. And so it creates this funny thing where a handful of companies are doing so well that they can carry the weight of all the companies that aren't doing very well. Just by comparison, I looked at a couple of things, like the whole restaurant and hospitality industry by volume, like all those companies only make up about as much as Amazon does. So that whole industry could be down 15 or 20 or 50% and Amazon's up 30%, and Amazon can carry that weight for them. So that's why we're seeing the S&P has recovered so well, is because it's really riding the backs of 6 major companies, and that's how the economy can be tanking, but they're the part of the economy that's not, and they're really carrying the weight, right? And so that's another place where we see all this bad news, but things are going up, and that's why that's happening. So that can make a little more sense in your brain. It doesn't mean everything's going up. It means a couple of people are really carrying the weight for the whole group, right? So that's kind of what's happening with the stock market, but the reality is the stock market isn't necessarily an indicator of the economy at large, what's really happening. So some numbers came out for second quarter, and this was a couple of weeks ago, for April, May, and June. Right? What happened? Really the heart of what we've seen so far of the downturn. And we saw numbers that we've never seen before, right? If they take that and annualize it, gross national product, that means like the economy, the whole United States economy was down about 32.9%, I believe is the number. So a third of the economy just went away, like just didn't happen. And the markets are still going up. Now, what's gotten us through that is, once again, all that PPP money, all that financial money that went into everybody's pockets, it's keeping people employed. Unemployment checks are keeping a lot of people who are unemployed afloat. Business owners are doing okay, so they're continuing to spend money, and interest rates are low. So it's really cheap to go get loans, to buy real estate, to buy equipment, to buy cars, and this is all by design. This is the type of thing that the Fed is supposed to do, the Federal Reserve, is they make money really cheap, and then they can, and then people will borrow it and go buy more stuff because the monthly payment to buy that piece of equipment or that house has gone down. People don't buy stuff based on the price. When they're talking about big things, they usually buy it based on the monthly payment, right? That's why houses have continued to go up, is because when an interest rate goes lower, then, and this explains why real estate's still doing really well, is the same monthly payment, say $2,000 a month, used to buy a $500,000 house, but now it'll buy a $600,000 house because the interest rate's lower. So that $500,000 house just went up in value, and as soon as the comparables to allow lenders to justify that happen, that house will go up in value. So we're seeing that, and in real estate we're also seeing a ton of people don't want to move during the pandemic, so there's very few houses for sale, so the ones that are for sale are going up because all these buyers are like, hey, the loans are cheap. So the government's doing a good job in that sense, or the Fed's doing a good job in making sure there's plenty of money out there for people to use, to spend, and it's cheap to get, so they'll spend more of it, which creates more business, which means businesses spend more. So that keeps the economy going. It's called the velocity of money, right? So all this stuff has been going on, and that's been great so far. Now, here's the part we got to pay attention to. The economy really did take a hit. People really did lose their jobs. There's a ton of people out there looking for work or surviving on unemployment, or who are about to go unemployed because their business isn't doing very well and their bosses run out of money to continue to pay them. And those are going to be a problem. So we're starting to see some of that stuff come into play. For the last 6 months, basically that stimulus package kept us afloat. It put a bunch of money out there for everybody to keep spending. And now some of that's starting to slow down. We're going to see how fast or how slow that slowdown happens. But it's really important for you to get that there are a lot of industries that are doing really well and they're totally fine. And then there's a bunch like hospitality, movies, entertainment, like a lot of that stuff, if it's not tech-based, is really struggling, right? So there's a world of haves and have-nots. In fact, I would argue that a lot of the people who have been working from home for a company that's doing fine, they got a raise in the sense that they make the same money, but they may not have been paying for childcare this summer because they're at home. They may not have been commuting, haven't had to pay for gas and maintenance on their car. A lot of their expenses may be lower. So a lot of those people have actually had more money than usual, which is great. That will help to supplement the economy. But there's definitely going to be a large group of people. I think 1 in 5 wage earners lost their job during this whole downturn. That's going to catch up with us eventually. So we see that coming. It just hasn't happened yet. The markets have looked at the numbers, but so many people have money to put into the market that the market hasn't really seen a sag yet. There's enough people who are still able to pump money into it that we're keeping that up. So the reality is the economy's in the tank overall. Some sectors are good, some sectors are bad, but overall it's much lower than usual. There's been enough money to prop up the market and a lot of people who want to be investors, so that's making a big difference. So the question for you becomes, what do I do about all this, right? And this is where I want to kind of turn to my notes here and make sure I get it right. To me, the biggest thing is this is your opportunity to acquire talent. If you've got a business or you're a manager or you're at a company who's doing well, you can get really good people who got laid off. They didn't get laid off because they suck or because they're no good. They got laid off because what they do maybe can't be done right now or isn't available, or they're in an industry that was forced to shut down, but they were excellent people. This is your chance to acquire great talent. There's a lot of people looking for work and there's not as many jobs as there are people. So, you know, in recent years, we've been in a labor shortage where you had to fight to get a person or a good employee. You had to pay a lot and offer a lot. Right now, you may not have to. And even if you do want to, and I suggest for good talent, you pay for it for sure because you want to keep those people. But there's a real opportunity. There's a bunch of people who are excellent that are out of work right now. So I would totally look at that. This is a chance to really revisit how do we get lean and how do we look at the underutilized resources in our business. Do we have an email list that could be valuable to other people that we could be utilizing? Do we have extra office space or warehouse space? Do we have something that's used at night but not during the day, or used during the day but not at night that we could utilize? Can we take a lot of our services online? Obviously that one's super apparent, but people are more receptive to online. I'm working with a venue that does live music and they're doing a streaming service so that people can stay at home and for a couple of bucks can watch streaming service for free or for cheap, get to see live music without all the risk of going out, and the venue's making money from that, right? People are getting entertainment at home that they can't normally get at home. So look at your business and ask, what are the resources we have that aren't being utilized? How can we take the same thing that we are already providing and maybe offer that in different ways? These are all huge things. The other thing that I see as an opportunity, not right now, but in the near future, is going to be real estate. I think there's going to be some opportunities, especially in commercial real estate, where a lot of people don't go back to the office So you want to rethink your office space. If you need office space, you can probably renegotiate leases, get better space for cheaper, because a lot of people who went home and started working from home, they're not coming back to work, right? So in the near future, we're going to be in a situation where there's going to probably be more real estate than is needed for a period of time. Eventually that'll probably all shake out, but in the short term, there's some nice opportunities there. So I want you to understand the key thing here. The economy's gone in the tank. We aren't seeing all of it yet because the government's doing everything they can to band-aid over it. And a lot of that has to do with elections, right? The people who are in power want to stay in power. The people who aren't in power want to get into power. So they're doing everything they can to prop this economy up. But what we're really doing is kicking the can down the road. If the economy doesn't continue to grow and generate, if it continues to be 30 to 40% lower than it has been, there's going to be some ramifications. So this is your chance to be smart about that. Don't let the market fool you. Don't let real estate fool you. Don't let the fact that people are still spending money fool you. Business is great, and for a lot of people it will continue to be great. But we're gonna hear some bad news. We're gonna see some things happening. What you want to pay attention to is what's going to be best for you and your business. What are the unique opportunities in your industry? And with that, you'll be able to do the best. If I could say one last thing, the most important thing I think you can do is invest in your good people and figure out ways to turn the same product or service into multiple streams of income. Those would be the two key things. So if this was useful to you, smash that like button, pass this on to your friends, subscribe to the channel if you don't already, and I appreciate you taking some time. If you want to know how to thrive in lockdown, I have another video on that from a while back. It'll give you some really good ideas if you're out of work and looking for work. You can check that one out next, and we'll see you on the next video.